overall, you know, because it's gonna cause you to wait between those, you know, between those trades. There can be, you know, there can be a lot of time. There can be 2 weeks. There can be, now it's not that we're stuck on one specific ticker, right? But I'm going to run you through a very, very, very strict BFI method, right? Which will be, you know, you guys are only going to work on this. You're going to work on the 4-hour, 15-minute pair, right? So you'll have your 4-hour zone. This is exactly what's in the crash course, right? So you'll have your 4-hour zone base to wick, right? That'll make your zone. And then when the price enters that zone, you're taking entry in the zone with a 15-minute signal, right? So like that, right? You're taking your entry in that zone. So that's the other part of it too, is when you do have the first retest of a BFI footprint, it typically doesn't spend a lot of time there. That's the only rub, and the reason it doesn't spend a lot of time there is because how powerful the orders are. Because they're so fresh, when it hits that zone, you can see what's happening here, like on this one example, right? That price comes down and it falls into that zone, and then look at this volume. The volume the volume inside the zone, like these 3 bars, right? Inside that zone and then leaving that zone were higher than the opening hour, the entire opening hour. And that's because those orders that are sitting in that range, they're so fresh and they're potent, you know, and then same thing like I told you at the beach, when you go from zone to zone, the price typically doesn't stop running until it reaches another pool of liquidity. Okay, you need to exit and re-enter your yeah. Yeah, whenever that happens, that's what you need to do. But that's okay. Yeah, it's all whenever that happens, if you can't hear me, like, I mean, one, you can see like around my name when I'm talking, because it's highlighted in green. No problem. Well, let me just make sure it's okay. We haven't started the final question. Okay, great. Yeah, whenever that happens, okay, then you're having an audio issue then. Yeah, you're having an audio issue. Yeah. Yeah, that's okay, there you go. Okay, great. But yeah, so anyways, going back to what I was saying, when the price enters the zone, it typically doesn't spend a lot of time there. I'll give a couple other examples just real quick. Typically, it's typically the first retest, it typically doesn't. It's not to say that it will. Obviously, everything is always probability, but typically that first retest, because it's such a deep value price, it typically doesn't spend a lot of time there. So it'll touch it, it'll grab the liquidity that it wants, and then, you know, it might sit there. I mean, in this case, it was only there for 30 minutes, but, you know, it might sit there for half hour, you know, hour and a half. Typically, it doesn't stay there very long. You know, it's going to make its move. Yeah, it's gonna make its move. I'm recording this session, Ali. So you guys will be able to have the recording after the session is over. I'll upload it to YouTube. So, but yeah, for this specific challenge, right? It's going to be important that you guys have the zones marked out. It's gonna force you to do the step-by-step guide that I'm gonna give you guys. Probably I'm trying to do it later this week. I'm just gonna do a simple one, and then I'm gonna do a more detailed one. Just a step-by-step guide of basically the process that I go through when I'm designing a trade, and I think that's gonna help you. But you're not only are you going to go through that process, but you're also going to do it with live money too. So you'll go through the process, and then you're also going to deal with the emotional and psychological, uh, you know, pressure that it's going to put on you. Because, like I said, it's going to be tempting, especially after you do the first, probably say 2 or 3. Right? After the first 2 or 3 trades that you do like this, and then you have like a pretty significant sum, being able to sit on your hands and just wait for that, it will, you'll see. You'll see what I'm saying. You'll be tempted to do other things, especially when you have a larger sum. But if you wait and be patient, it can turn into a lot bigger one. So, but it's like I said, waiting between those trades, it might take 2 weeks for that price to come back. It might take a month. I mean, we're not going to be stuck on one ticker, but okay, we can even like look to this, right? We can even look to say like Amazon, right? Yeah, all right, maybe this one, it only took a day for it to come back and retest and get that same movement, right? And maybe it only took a day, but it sometimes it takes a lot of time. Like, okay, like for example, like Microsoft. Like I've been waiting on Microsoft since the last trade I did, which was like all the way over here in, where is it? In end of August, early September. Like I'm still waiting on this retest. I'm still waiting on this retest up here. Right? I'm still waiting on those two to happen. Notice I haven't taken any, big Microsoft plays here because I'm waiting for those zones to retouch, at the extreme. So that way, I can not only I can make a swing call out for us, right? But the probability is just in our favor no matter what we're doing if you wait for that retest. Just being patient and waiting for that full retest all the way back at the zone. That's just, it's such a big key. Like here's like another one, right? Like we did this trade earlier in August off the 130 level, right? But this was August 6th, right? Where this origin occurred and this zone retest occurred off this like 133 level. It didn't come back to that same level until a month later. It took 4 weeks for that price to come back. So the other side of the other part of this rule, for this challenge too, is it's only going to be on the long side. So it's only going to be on the long side. So I'm only taking a long side BFI zone origin retest, first retest of zone, So it's going to take a lot of patience. We're not stuck on any one ticker, but that's going to be part of the discipline, and really what this is more so about, the money is more it's a byproduct of your discipline. It's a byproduct of your discipline and your patience, But really what I'm teaching you guys what to do is work within very tight parameters, of a process. And you know, you guys, each individual has their own exposure to different types of processes during their life, but some things are more flexible, and and then some things are obviously very strict. But a lot of the things in our life, we're able to act on them, relatively quickly, and this will command just a different level of patience that you may not be used to, and also a little bit of the psychological stretch, if you will, because depending on what your relationship is with money, just when you're putting on a larger position size, like whatever psychological demons that you have, they're just gonna come out to play. I mean, it's really that simple, and that will most likely occur after this, probably the second or third trade, most likely. I remember the first time that I did it. The first time I ran a setup like this, and that exact thing occurred, because I'm like, oh man, like I'm putting on this large position size, right? And not only am I putting the position size on, but it's like, damn, like this is a significant size of money that would be impactful, let's say, in my life, but I'm choosing to, you know, put this position on, and deal with and accept the outcome of whatever that outcome is, right? And then it is what it is. But again, it definitely, after doing it once, doing it twice, I've done it many times, going through that process, it causes you to grow in that way, where you have that psychological growth, and then you become more indifferent towards the money, and that's really what you want to be. That's really once you develop that indifference towards it, then the entire market will look differently to you. So where you once you get to the point where you're not excited about a win, or upset, or feeling down about a loss, big or small, that's when the real trading actually begins. That's when the real investing actually begins, because once you have that, then you can let large not only large trading positions, but also large equity positions just be out there floating. You know, like right now, I have a massive equity position in Caterpillar, Tesla, Microsoft, AMD. Like those are just out there floating. Baba, they're just out there floating, and I'm okay with that. So, anyways, that's really what I wanted to dig into about the 5K challenge. I don't think I need to push it any more than that. And like I said, the session's being recorded, so you guys will be able to review this stuff. But I'll also put the rules in the 5K challenge. I'll put that in there tonight, and then we'll start on it. We'll start on it tomorrow. So, yeah, I will. Yeah, I'll pin the rules in there for sure. Yeah, I'll pin the rules. Um, and then yeah, we'll get started on it tomorrow, and then we'll start doing that, and that'll be a lot of fun. I've done it many times on my own, doing this compounding stuff. Like I said, I did it a few times this year already, just to see how far I could push it. So, I've already set an extra 5K on the side to just specifically just for this challenge. So, and yeah, so that'll be fun. Yeah, if there's any other questions or comments on this, it's all, I already know the basis of your question for what we discussed, but if you could just write that down with any other extra details, just if you could throw that in the chat real quick, just so I make sure that I'm covering everything perfectly. I want to make sure I cover everything well, because I know that this question is probably going to provoke other questions from people in here too. So, but I also want to make sure that I'm covering it all. So it was a good question that you asked at the beach today. Just give them a second to type it up. Okay. All right. How do you pick the time and strike intraday to swings to leaps? Okay. All right. What? Okay. Before I start digging in, what do you mean by the monthly level? It's not actually 30 days. Because I got my answers ready, but I want to make sure that I understand you. Oh. Okay. All right, I got you. I see the confusion. Okay. Okay, perfect. No problem. We'll use it doesn't matter what we use. We can use Amazon. Okay. Let's start from the beginning. I'm gonna run you through the whole thing on a swing. Okay. I'll run you through the whole thing. Okay. All right. All right. So let me answer that monthly question first. When it comes to support and resistance, the monthly, the zones are typically pretty easily seen on the monthly. If you need to get into tighter to get a little bit more clarity, you can go into the weekly and then the 4 hour if necessary. But the monthly zone is going to be the same kind of idea that we use when we set up a BFI footprint, which is going to be base to wick on the, but it's just on the monthly. That's all it is. Good question. Okay, yeah, good idea. I want to know, how do you pick? Yeah. Thank you for that. Yeah, let's start over. The question is, I want to know, how do you pick time and strike intraday to swings and to leaps? Also, a monthly level doesn't start on the first of the month or a designated date, obviously. However, when you go back to see the monthly level, it's not actually 30 days, but where the support and resistance is plain to see. Meaning, when you are this month, how do you know where the monthly level is? I mean, sometimes the month is between a support and resistance. What's the accurate way of seeing where the monthly level is, basically? Okay. All right. Now, I want you to take this perspective on the market. Okay. Just try this out. When you're looking at monthly chart, weekly chart, high time frame, okay? High time frame. Just consider it mentally. What would you do if you were trading this chart here on a 15-minute time frame intraday? If you were day trading, what would you do here? Where do you think the orders are coming in, right? What information can you extract when you're observing these candles as they played out, right? Let's just focus on these last few just to make it really even easier. I'll stretch this out a little bit. Let's just focus here on these last, 1, 2, 3, 4, 5, 6, 7, 8, 9 candles here. Okay. All right. Let's clarify some zones here, using the same kind of ideology that I've explained to you when you're setting up a 4-hour zone, right? And these are just for like typical swings that we do, right? All right. What data can I extract here? Let's look at these last few. Well, I know that when the price cleared this level here, right, I can see this wick where there was a little bit of selling pressure. But then when the new month started off of this 155, 57 level, a very strong order came in, right? And this would be what we would consider a BFI footprint, okay? So that's something for us to note for the future. Now, they obviously cleared whatever supply orders were sitting here. Let me get a tool up. Let me get a square, right? So whatever supply orders were sitting there, they got cleared on this pushing up, right? Yes, exactly. I would probably want to look for longs at 155. Bingo, because of the strength of the candle. The strength of the candle was very potent, right? And you can see, like, imagine if there was supply orders here beforehand, which we see on that prior monthly, they obviously got cleared out. So when that price returns, you can assume that BFI they made a decision there. They made a decision at that origin. Like, it's guaranteed that they said, you know what? When the month of, February started, we're going to buy here now. Okay? That's it. We are going to buy right now. And in order for that price to move beyond this level here, This is the same thing I was explaining to you on the beach. It's all in order for that price to move beyond and close beyond the 162 level, which was that prior high on the monthly. All of these supply orders have to be cleared out. Okay, it cannot move past that level until those orders are gone. So what has to happen for that price to move? BFI has to buy. They have to buy to clear all those limit orders out. Okay, so you know that in this range here, for example, even though this candle doesn't have any wick or base to it, it's just a full body. That's even better. That's a signal to you that, hey, there's strength here. There's a lot of strength. Now, after they push it up, now it's been pinned in this range here, okay? What's the number one rule for BFI? After they take a position, they're going to add to the position and protect the position, okay? So they're going to add to the position, protect the position, add to the position, protect the position, okay? Now, they've pushed it up the next month. Now we have some zone to work with on the buy side, right? We have a zone to work with. We haven't had a big sell-off at this point when we get to March. A large BFI footprint hasn't occurred. We haven't got any supply there yet, right? So all we have is just this monthly here, base to wick, base to wick. And you can see how across time, even after all those months, they added to and protected that price range again and again and again and again and again, right? Is there an external tool or resource that can show us there are pending limit orders in that old supply zone? Something that would hint at a potential revisit to the BFI footprint. A lot of times, Stephen, that's actually a good question. If you go back in time and you look at the volume profile for that time period, you'll see things like this, for example. You'll see it like this even on the monthly. And you know, when you see something like this, for example, on the monthly, they got a position there. I promise you. Like, when you're looking at a monthly time frame and you see like something like this, there's a position there. Plain and simple. There's nothing that's going to tell you that it's going to go back there, but you know that they already bought there, and they bought there with a lot of size, like a ton of size, right? So kind of same idea here, so same principle. Yeah, you don't have a large point of control here. There may not have been as much volume that they needed to push through in order for that price to get up there. But you know they bought because of the size. Here's the keys here. The size, shape, and distance traveled of the footprint, and the time in which that it took to get there. Okay? This is a decision. A decision was made to do this. It's not going to happen without it. So, you know, in order for them to clear that block of the prior supply, they have to buy. So, when you're trading on these large time frames, when that price comes back to a monthly order block, the same when it came back here, it's the same idea that when it came back here, like when it's pushing off this supply up here, and then they cleared it, right? And then look, there was supply here on the monthly, right? There's a wick there, and then when it came back to that, it did the same thing. You know, hopefully you're kind of seeing what I'm getting at here. This was actually part of, if you guys remember back in, July, when I made the call on Amazon to short at the 200 level, that was part of the reason why. I'm not like making this stuff up I'm not making it up as I go. I'm just looking at what's there, and then I'm making a decision based on that understanding. So I'm like, all right, they sold this top. Here's back to our 5K challenge. The first retest of the BFI footprint is most likely going to repeat that same move. You know, it's most likely gonna repeat. So that first retest of that origin is key. So going back to Atal's question, where you can identify support resistance the most clearly will be on monthly and weekly time frames, okay? And you're going to look at those in the same way that you would look at a 4-hour zone, which is going to be base to wick. Now, you might say to me, okay, Eric, well, what if I got a candle like this? Like, let's assume you don't have that other information over to the side. You don't have that, you don't have this information over here. Maybe you only got that, right? Where it's like, all right, yeah, maybe they bought it here at the 50% mark of this bullish engulfing candle, which you guys know is another entry method, by the way. After a bullish engulfing candle prints, you set an entry at the 50 to 61.8 retrace of that candle. It works the same on any time frame, by the way, just to throw that out, that extra little snippet in there. But let's say you're like, all right, Eric, all I got is this, and it's not really giving me, like, you know, good data, let's say. That's when you would zoom in to like a weekly time frame, which is my favorite, by the way, the weekly time frame, and get a little bit more clarity on what exactly happened, and what exactly happened with what kind of volume and how far it traveled, etc. So let's go ahead and do that. So this is April of 24. Let's go back and let's learn about the weekly. All right. So now let's look at things. This is clearing it up for us. Okay. I'm going to ask you guys a question here. What kind of candle is this right here? What do we call, what does that mean to us? Right. Yeah, it's a doji. I'm trying to go back and refresh your memory here. What does this mean to us here? What does this signify? If you were on, sorry, here we go again. If you were on a 15-minute time frame and you saw that, what does that tell you? I'm asking everybody who's listening in. No. Let's assume you don't have this information here. It's all, this is going to be new information for you, by the way. Let's assume this is all you got right here. That's it. What does that signal to you guys? For those that have been trading. Right, what else? Yeah, imagine you were trading this on the 15-minute time frame, right? And you saw that. Imagine you were trading this chart here intraday. This is maybe you took your entry here or here, let's say. And then you see that at the top of the chart. What is that? What's that telling you? Mm-hmm. Right. Nice. Okay. Good. All right. So good answers here. It's a decision candle is what it is. A decision is being made there. Now you don't know at this point, is it a decision to go higher? Is it a decision to reverse and do what it did there? Right? What kind of decision is being made there? You don't know. Okay? But a decision is being made there, is what's happening. Okay, now you got some information. Now you got even more information. Okay? Let's go. Now, this happens for you on the weekly. Now you got data, right? You got data. Now you have some range to work with. Okay? You got some range. Here's the first retest of this weekly zones here, right? Now remember, they stuffed it earlier, right? They stuffed it earlier. They retraced it 50% of that engulfing candle, right? And then from there, they pushed it higher, right? They pushed it higher. So it comes back and it retests that origin of that second leg of the impulsive move. And what happens? What would you call this now? What's happening here for this candle to close like this? What's happening from an order flow perspective when this candle prints? Remember, this is a weekly time frame. Right. Okay. What did BFI do? Yes, sales are probably exhausted. Yep. Yep. Yeah, they got all the liquidity from all these weeks before. Yep, got them. Yep. What did BFI do here? What did they do? What is this signal telling you? Right. That's right. Yeah, they're protecting their investment. Yeah, exactly. And how are they protecting it? They sweeped. Look at this. Just hang with me here. 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks of anybody who entered long during this entire period gets swept when that price breaks that level, right or wrong. Most likely, because their stop is probably sitting at the low. So they sweep everyone, right? They go back to this zone here, base to wick. Okay, I'll highlight that in green. They go back there, base to wick, and they buy again. Simultaneously, they're also protecting their position that they have here, where they stuffed that price and pushed it up, right? Are you guys following me on the big picture here of what's happening? Okay, I'm going to tie it all in together. Okay. Now, clarify base to wick. It's just the base of the candle to the tip of the wick. That's it. On both the supply and the demand side. Base to wick. Like how I have this green box here. Base to wick. So like this is an origin of this impulsive move, right? This is the origin of this impulsive move. Yeah, it'd be open to low. Yeah. Yeah, so for supply it would be open. Yeah, so for bullish candles it'd be open to low. For bearish, open to high. Yeah, exactly. Yep. Exactly. Yes, sir. All right. Now after this price is pushed, okay, Remember, we're on the weekly time frame. All right. We're on the weekly time frame. We have some data. We see BFI bought. Oh, here's the next question. If you're trading this chart on a 15-minute chart, right? And hopefully, I mean, I've been teaching you guys to buy at the origin. But even if you didn't, after this candle prints, what's likely going to happen after this prints here? If you were trading this 15-minute, what's likely to occur? This is the data you're working with. This is the chart. You have this chart intraday. What's likely to occur from here? If you were trading SPY like this, and this was your chart, all of this printed intraday, and now these three candles printed in this sequence, if you will, what's likely to happen from here? I'll give you guys a second to think about it. Forget the POC. We're trading intraday. We're intraday here. I want you just to imagine if this was an intraday chart, 15-minute time frame. Yeah. Price? Okay, perfect answer. Price, it will look to take old highs where liquidity is. Okay, so where's our exit? What's a good exit in this scenario? If you now think from a BFI perspective, what's a good place to exit? You're giving the perfect answer, Stephen. I want you to finish it now. You're in long. Where's a good place to sell? And maybe if you're bold, because you're thinking like BFI, where's a good place to sell and maybe pivot and go the other way? Yeah, where the liquidity is. Sell into the expansion upward at the top of that range and scale out. Okay, perfect. So if it's going to take out the old highs, right, we have our zone here where we know they sold, right? And then we could say, all right, over that range would be what? It would be not only a first retest of this BFI footprint, but what's sitting above this top here? Yeah, you got it. It would be yeah. What do you call this? What's sitting up here? What is this? What's sitting right here? What's sitting right up there? Yeah, I want you to think liquidity here. Okay, good. Oh no, they're already smoked, man. Yeah, they're already cooked. They got cooked on this. They got cooked in the squat here. Guarantee. Steven, you're thinking about it right now. You're inverse in your thinking right now. All right. So yeah, you're going. Yeah, there you go. Yeah, Ali's got it. All right. So it's going to be BSL. It's going to be the buy side liquidity, Stephen. It's going to be the stop for shorts. Okay? So anyone that shorted this top or shorted this range, Their stop's sitting in there or right above it. Okay. At the same time, anyone who wanted to go long on this break after they saw all of this play out, they're probably going long off this break. So above this range, this is buy side liquidity. All right. What's probably going to happen next? Probably. Let's just talk probability here. What's likely to happen next when that occurs? When all of this occurs, it comes back into the supply zone for the first time, and then price pushes right above that top. What's likely to occur? Yeah. It's likely going to sweep that buy side liquidity and use that as a short position. That's right. Why? Why is that? Why is that? What? This is a deep rabbit hole question. Why is it? Damn, you fucking got it on the first answer. That's right. BFI are long and short simultaneously. Just as much as they have a position here and here, they also have a position here on the short side. All right, let's go forward in time. What happens? Look what happens. Here's the top. I'm going to just slide this over, and I'm going to put a line there. Look what happens. Takes out the high, goes into the buy side liquidity. They add and protect their short position. They're adding and protecting the short position here. Now this is a weekly time frame to clarify. Remember, a decision was made here. You have a zone. Okay? You know what it looks like on the monthly. It's the first retest of that range from the month before, right? You saw it sell here. Now it's coming back to that zone that you clarified on the weekly and monthly, and it's sweeping the high for another run. You guys following me? It's sweeping that high for another run. And that's very easily seen on the weekly. Very easy, right? Like, I mean, like this based on what I just explained in the last 45 minutes. Yeah, absolutely. Yeah, I can even write it on the screen. Yeah, I can clarify that here. I love TradingView because it has this. You can just go just like that. We can just zoom this down to just like that. Yeah. That way it's clear. Go to 18, just put it in there. Okay. Just like that. And then here, we can do another one. Let's do it here. Okay, just put that one there, and then I'll add a square, so that way you guys can follow along with these concepts, like that. And I'll make it red. Okay, And that should be a nice clear picture for you guys. Just now tying it all in back to Ital's original question, which is picking time and strike on the swings, picking time and strike on the swings, and also, but more importantly, also where to enter and defining those ranges, which is really what, meaning, going back to his question, where you are this month, how do you know where the monthly level is? So what we just went through right there was me defining those levels, right? I just went through a whole process with you of defining those levels, only using a monthly and weekly time frame. I didn't even go to a 4 hour. I didn't even go, super tight. I just used the weekly and monthly. And like I've told you guys, the weekly and the monthly are no one spends time on those charts. But if you do, it will clear things up for you. It'll make them crystal. And really where you just need to focus is on those weekly and monthly time frames is where the origin is. Here's the origin. Here's your base to wick. There's buying pressure here. This buy, like, think of it like this. This was the last weekly zone that caused this price to move up to this high. This was the last weekly zone that caused this price to move to this low. That's the big key takeaway here. So when the price goes back to those origins, 1 and 2, you're looking for either a clean retest or a sweep, like this one. Here, this one's a very clean retest. This one's a sweep. Okay? That's what you're looking for. When the price returns, that's what you're looking for. And then what you're doing when that price enters that range for these type of swings is you're looking for those 15-minute signals that I've told you, what to look for. You're looking for a high vol. I can almost guarantee you, if we go out of, it's going to take time for me to go back and do it, but I can pretty much guarantee you there are high volume 15-minute pin bars sitting right here at the bottom of this wick. Okay, I just know it. Like it's there. And at the same time, there's probably high volume pin bars or pairs sitting right in the top of this range here. Keep in mind, I just drew this rectangle as just a rough idea. I didn't make it exact to that, top of the wick, because we didn't have that data. All I was more interested in is just breaking that high. Now, in terms of target, right, answering the question of target, like in how long it should take, if you will, or the timing of it, the timing of the play. At a minimum, anytime I swing, I go at least 2 weeks. That's just the minimum, no matter what. Just as a default for a zone retest. That's just a default. It has to be at least 2 because sometimes it'll pause there. It can pause. Kind of like this one, for example. It could come up and sweep and then not do a lot. It needs, a little bit of time. But when you're trading monthly time frames, okay, like monthly candles, monthly contracts are typically ideal because in order for it to go from point A to B and then B back to A, it might take a month or 2 to 3 weeks. So those are just, good rules of thumb when you're trading on the monthly zone, which was where your question was geared towards, Ital. Asking about where the monthly zone is and how to enter and exit, etc. Okay? I heard a couple pings at the bottom. Can you show us the 4 hour long wick candle on April 15th. Well, it would have been on this week, not on this week. It would be here. But yeah, we can go back. We can go and look at it real quick. So it would be the week of the 22nd. Here you go. Here you go. Right here. There's the week of the 22nd right there. Note, now coming back to what I said at the beginning of the video, like I said, it doesn't spend a lot of time there. When it goes to that first retest, it typically won't spend a lot of time there, especially on the long side. Okay? Especially on the long side. Long side, it's just the market is structured long. So, I mean, that's it. 80% of the time, if you take a long position, period, you're going to be right. So, you know, when it comes back to those monthly zones, weekly zones on the long side, notice it didn't take look at that print there. Like look at this candle. This is telling you, this is telling you everything you need to know right here. Like this is it. They're making their move now, like right now. Okay? And you can kind of see what happened here. And these are just simple retests. Simple stuff. But you can clarify these ranges nicely on that weekly and monthly. And then you can zoom in a little further. Like once you got your range defined, like everything that's on here right now, I only use the weekly and monthly to define it. I didn't use anything else. Right? I didn't use anything else. All I was using was weekly and monthly. But then when I zoom to the 4 hour, it gets even more clear. You're like, oh yeah, well, they pushed it back here and then they added to it. And they came back again and wow, what do you know? They added to it again and protected and they pushed it up and gapped it and it pushed past that sell side liquidity there. It retraced had a slight pullback and then look, it break held and closed above it. It's like, you guys see what I'm saying? Like you can clarify this stuff more easily on these higher time frames. It's when you get to the really, really small ones, that's when it can get, it can get cloudy, if you will. Thursday, April 25th. Yeah, it would have been the day of it would have been the 25th, correct. Yeah, it's probably right out the open, I imagine. They probably opened the market there and just took off. I mean, I can go back real quick just for video purposes and just to see it, just so we can have it on the video. Here you go. There you go. We can put some volume on it too. There's your signal. Right there. Right at the open. Our classic signal that we're looking for. A high volume pin bar in a zone. It's time to buy. That's it. It's time to buy. And let's, just for shits and giggles, let's go back and look up here what we had at the end where this started failing. Just want to see what this was the first one. Where's the second one? Where's the first retest? Okay, here we go. Here we go. Yeah. Another high volume pin, 2 of them. 2 high volume pin bars in the zone, and it even gave a liquidity sweep later in the day. So for these swings, right, like this is where you would scale, like when you start getting those kind of signals. Yeah, you can even see the volume start elevating too as that price pushes up. Look what's happening intraday on that liquidity sweep. This is the sweep right here. That's where it's happening. Right there. Look at the volume on these candles right at the top of the chart. Look how it's elevating as it approaches the high. And that's the start of the downtrend. from the same weekly zone. I'm going to go back to your question, Stephen. Buy-side liquidity is the profit target for long positions. Yes. Sell-side liquidity is the profit target for short positions. Yes. On every time frame. It doesn't matter if you're trading intraday, monthly, weekly, 4-hour. The ideal exit is going to be where the sweep is. Now, with that being said, when this price enters this zone, like let's say let me get on a better time frame. No, we'll leave it on the 15. Actually, this is better. This is fine. All right. Let's say you took your long here, right, off this zone. You took the long in the weekly range, okay, off right in there, right at the open. Your bold man starts trending up. You add to the position, whatever, right? All right. Now it's coming back to your weekly zone here, okay? It enters the zone. This is where our scaling helps us, okay? It enters the zone. Now you're starting to get some signals, looks like, on the 7th of May, right? You're getting these high volume pin bars starting to print, bearish engulfing, downtrends, etc. You're getting multiple signals that, hey, it's not pushing up. This closes a red day, it's failing. Okay, this is where it's time to sell the majority of your position and leave a few runners to see what happens. Maybe it's going to sweep. If it sweeps, sell into the sweep. But once price enters the monthly zone on either end, you want to be pretty much out of 80, 85%, 90% of your position. Like that, I mean, that's it. Because you don't want to get caught up. You don't want to get caught up holding long, hoping for the breakout to occur, right? You want to just be taking those profits in the zone and then waiting to see what's going to happen. Just waiting for more data, simply put. And if anything, once you start getting those nasty signals like this, you probably start building your short position because it's a first retest. In the same way that we did it here later on, we did this short up here. We did this. We entered like right here at the 200 mark. The reason I entered there is because of this sell side liquidity here. So really simple. Just when it came back and printed a signal, it printed multiple signals, but I started the trade here because I thought it was going to develop a monthly zone, which is exactly what it did. It developed a NAS. I should have stayed in it longer, actually, is what I actually kind of left it early because I was looking what this was. We started it here. This was the week of July 5th on our trade ideas. I thought a monthly was going to develop there. I actually underestimated how far it could run. I closed the trade here in like the 180s as it was approaching the end of this monthly. It's basically a 20-point run. So I did 200 to like 193, and then it was like a 190 to 180 or something like that. And I ended up closing it out. I wish I would have held it into this nasty dip here, but I didn't think it was going to run that far. Again, basing it off of these monthly and weekly zones that were printed here. That's why I closed it out at like the 180-ish mark, because I was like, this is getting low probability, if you will, that this trade is gonna continue down, if you will, if that makes sense. So, but yeah, going back to the original question, just defining those monthly zones, weekly zones. Use the monthly and weekly together because you want to see, okay, all right, I got it's like a rough estimate, right? Got my rough range here, and then you can define it more clearly when you go to the weekly. You can define it even more clearly when you go to the 4-hour, and then you can get your signal on that 15-minute time frame intraday when the volume is present in the market. Okay? So that's going to be your step-by-step process, if you will. That's how you go, go and break that down from the swing side of things. This is a little bit more detailed than the crash course. I'm going a little bit deeper detail here, and I would also highlight one more point too, that the first retest, obviously, I just want to say it again, that first retest, man, is so potent. It's so potent. Whether you're long or short, doesn't matter. Long or short, the first retest of that monthly, weekly range, it's just you can go back and back test it. I mean, just go back and back test it. You'll see what I'm saying. It's just so potent. It's so potent, but you just got to have the patience to wait for it. Waiting for a weekly retest, waiting for a monthly retest, like those are going to be the trades that I'm going to be posting in the challenge that we're about to start tomorrow. That's all we're going to be doing. We're not going to be doing anything else. So, and then I'm just going to define the parameters of how those are going to be executed. And they're going to be only on the long side too, which is going to make it even better. So basically, I'm shifting the probability to you guys to the absolute maximum, the maximum probability that we could get out of a trade, which is a long entry weekly, monthly, weekly zone from a BFI origin. That there's nothing, in my opinion, there's nothing more potent than that in the market. Nothing trumps that. That combination of variables. Baba, stop. Okay. So that's what we're gonna do. Great question, Ital. Hopefully that cleared up a lot of things for you. If you have anything else that you want to add into that, feel free to. No problem. Yeah. Yeah, learning about pin bars, yeah, definitely key. So it's high volume in association with the pin bar. Okay? That's the biggest key takeaway there. A low volume pin bar, it doesn't have as much significance. A high volume pin bar, printing at a valid level, yeah, that gets your attention. That commands your attention. Okay? Exactly. That's exactly what I mean. A high volume pin bar printing at an edge or within a zone, that's telling you that a trade is taking place, and it's most likely about to pivot. Whatever direction it's going, it's probably going to turn around. It's probably going to turn around and go the other way. Obviously not every time, but more often than not. And that's ultimately what you're looking for in the market. You're looking for an edge. You're looking for something that has a probabilistic outcome of happening more than the opposite. And that's it. And then as long as that edge has a not only a higher probability of playing out than the opposite, and it has a good enough risk reward, all you got to do is just act on that edge every single time. Every time it shows up. This one here? Yeah. What about it? Oh, yeah, of course. Come on. Yeah. Let me put that in the video. You see that super long pin bar in August? Can you show us the week and the 4 hour? Absolutely. So this was during the crash, first week. Okay. So here's your, let's go August. So here's your weekly bar. Remember what I said about that zone back here. Look, we're tying this whole video. I'm glad you asked that. We're tying this whole video in together. Okay? Let's go back in time to the beginning of the video. When they push this price up here, right? Let's go back to that monthly real quick. Look, here we go. When they shove that price here, let's get this in the right perspective. Let's just take this away. When they shoved that price here, right, they had to break this high of this wick. So in order for them to do that, they had to buy this whole candle. Now look, all I'm going to do, I'll just stretch that bar out all the way. So if I know, let's make this green so that way it makes more sense. Because it was supply, but now it's a buy. So if I know BFI bought here in this range, right? I know they bought in that range. Okay, let's go to the weekly. What happened on the weekly? All right, so it came back down underneath that range. It got a little bit past it, right? It opened up because it gapped. And then what happened? It just stuffed. Okay, so that's what it looked like on the weekly. All right, cool. So let's go to your question, the 4 hour. What does that look like? What does that look like? Let's put some volume with it. Look at this amount of volume look at this volume here in relation to all this volume except for this volume here, which is pushing up towards the top. These are supply orders here. It's where we took the short. So this high volume bars here occurring at a monthly zone, this is probably an entry here, sir. Let's go down to the 15-minute. What day is this? This is on the 5th. What's happening on the 15? Where we get our signals from. What's happening here? You're essentially, it's not a full bullish engulfing, but essentially that's what you're getting there. You're getting a single candle with tons of volume, chewing up everything that's in the pre-market, and then it spends a little bit of, I mean, it doesn't even spend any time in this zone. It spends the day there, and then after that, a couple touches, and it's off to the races. And it never came back. It hasn't been back since. So yeah, I mean, those are, you know, that first retest of that range, right? If you were to wait, if you were to have the patience to wait for that, right? We've done a bunch of trades on Amazon in between them, but look at where it retested. Here's that origin here. Here, let's throw a line there. Here's where they made the decision to push that price above. It made it right there. Okay, so that's where the decision was made. Let's put a line there, and then we'll just go into the future. That's the origin right there. That's the origin of the BFI footprint. Okay, that's right. So we know BFI took an entry there, right, Ital? You can see it. We know they did. They had to have, right? Because only BFI can do something like this. Only they can do that. So let's go back to that exact origin and just go in the future. We know they bought there. So when that price comes back again, they're not going to let their position get attacked. They only let that price underneath their entry for like a couple hours. That's it. They just let that liquidity get chewed up, and they bought it right up, right out the open. As soon as the market opened and there was volume there to trade with, they bought it right up and protected that position that they have at that 160 level. You see what I'm saying? And then look, they continued to protect that 160 entry moving forward. Look, tapped it there almost to the penny, man. Tapped it there, tapped it again, tapped it again, tapped it again, tapped it again, one more time, and that was it. And it's gone. They're just gathering some liquidity here is all they're doing. That's all that is. But they're buying. They're adding and protecting the zone, as they should. Because they don't want that position to be exposed. Not if they plan on taking this thing higher. Of course not. They don't want that to happen. That's against their goal. They don't want a bunch of people selling against their position. You follow me now? Is that helpful? Why that origin retest is so important? I'm telling you, the origin of a BFI footprint, man, and you get a signal there, it's time to go. Okay. Now, hopefully that I feel like this session probably cleared up a lot of things for you. And it was probably a great refresher for everyone. Mm-hmm. Yeah, it could be. Yeah. Yeah, it could be. Yeah, it doesn't have to necessarily be the last month. You always want to be mindful of the monthly though, because no matter when you look at the monthly, actually, you know what? Here's a good ticker to analyze that. Like it could be 4 months back, right? Here, look at this. Here, you're gonna like this one. Okay, same concept that we just. This is the same. Let me just. How do I hide it? I forget. How do I hide the? Is it on here? I'm just trying to hide them. Hide the drawings. I forget how to do it. Whatever. It doesn't matter. It doesn't matter. All right. Okay. Let's look at this monthly. This is the data that we have here. Okay. This is the data. All right. They sold here. They sold there. Right? They sold here. They sold there. They bought here. They bought here. They bought here. They bought here. Okay. All right. Now, that's our data from the past. Let's go into the future. This is the exact same concept we just went over on Amazon. Identical. Identical. Okay? In order for them to push that price past this range, what has to happen? There's supply orders here, right or wrong. You guys can all see that. Okay? This isn't nothing new here. There's a monthly zone at the top. Okay? Just doing it quickly here. In order for that price to move past that, what does BFI have to do? They have to buy, right? That's the only way that price can move past it. Okay? It can't go past it without all those supply orders being cleared out, right? It has to happen. Okay? All right. So what happens in the future? They buy. They stuff this price up, okay? They shove this price higher. Now, what was the price when they decided to make this move? What was the zone or price or origin where there's too many lines on here. I'm just going to delete everything because I want to just take it off. If we had that zone there and we know they bought, right? Let's just throw a single line there, right at the base. We know they bought there. Here's that bullish print that shoved it up, right? Yeah, exactly, about 92.81. There's a tip of that, all right? Okay. We know they bought there to push it past this monthly range, this monthly supply range. We know they took a position there. So then when that price comes back and retests this range, right? It It comes back into that zone, even though and this is actually, this is great that you brought this up, Ital. Even though the earnings on Micron were not that favorable, fundamentally it's not in like earnings momentum ideal situation to take a long position, but the price comes back to a point where it's so appetizing and it's approaching a BFI positioning that they're forced to add and protect their position because they believe in its future. So when it comes back to this monthly zone, or this break line, if you will, right? They add and protect. Add and protect. That's what's happening here in these wicks. That's what's happening. This wick is a buy order. This wick is a buy order. Okay? So even if you were to go last month, let's say you have this red month, right? And you have this over to the left, now you can make a monthly zone just like this. Okay? You could go back in time and look at some more data here to figure out exactly where they bought, but I'm literally only using the monthly. So when this price comes back into this zone down here, right? Comes back into the zone. This is the monthly. I'll go to the weekly to clear it up a little bit more for myself. Let's clear it up a little bit more. Okay, so they obviously were taking this buy order in the deeper half of this zone, right where Steven's saying, basically at 92 and change. Now I can get on the 4 hour, right, and clear this thing up and get a nice 4 hour range retest, I bet. All right, where did they buy? Let's look at this. Let's look at it. They bought right here in this chop zone. Ital, you see why I like to buy when it's chopping. Okay? Now let's make it even easier for ourselves. Let's throw a volume profile here. Look at this volume ramping up as it's entering the range here. So here's our zone. Here's our zone. Here's our origin, right, of the prior monthly. Here's our zone. Here's our prior monthly. Okay? We got our 4 hour consolidation happening, right? Got a 4 hour consolidation. What's happening from a volume profile perspective in this range? Okay, all right, we got liquidity right in the center, just as expected. Like, that's not surprising because there's probably a ton of liquidity there. Okay, and what day is this? This is this is during that crash too. So it's the 5th, the 6th, the 7th, 5th, 6th, and 7th. So let's go to our 15-minute chart, right? Remember, we're in the monthly zone here. We're in the monthly zone. We'll go back to the 5th, 6th, and 7th. Let's look at what happened. This is the first retest here. Okay, let's see what we get in this range. Do we have a signal? We have a signal right out the open. We have a high volume pin bar from the baseline of the zone. Okay, it starts an uptrend. Let's see what happens from there. We have some resistance here at that time. This is another question you asked me at the beach. How do I scale in, or how do I add? It's got to clear the order block, right? Remember that discussion? So I can see there's a supply here. The supply probably from this gap. Okay, cool. It's not clearing it yet. Hasn't cleared it. I got maybe my pilot going, or maybe a second entry even in the deep half. But let's say it doesn't. Now I finally get the break, hold, and close up here where it's shoving past it. It's moving past this order block. Now it's time for me to start adding into this swing and take a ride. Okay? Now here's the fun part. I took the ride on the trade. Okay? Took the ride, whatever. Good move. It moved 20 points. Okay? You should be considering taking profit after a 20-point move. Big time. Now, the first retest of that same zone is the most potent. So let's go and look back at what happened. It ended up coming back to that same zone, right? It came back here, and look what they're doing. They're protecting it to the penny. Look, like it's to the penny, man. It doesn't get better than that. Okay? You have a multi-day base with your point of control developing in the center of the base at the first retest of the BFI origin, and then you're just simply looking for those same signals. Here's another high volume pin bar. You know, you're getting double bottoms in the middle of the day. Like, you're getting all these high volume signals like this one, like printing here, and you're obviously adding and protecting in that same monthly and weekly zone. So it's time to open a swing. There's no reason not to. They're showing you that they're adding and protecting their position. Are you guys following me? Why these zones are so important on the weekly and monthly time frame? And then also how to add and scale into it. It's like, I got this order block here, right? So if I know I got an order block that's stopping this price from moving higher, right? I want to see it start clearing past it, like moving beyond where these sell side orders are, like moving past, ideally with a little bit of strength, like something like this, like that, pushing above that level. That's going to show me, hey, you know what? This monthly trade, because typically when it pushes past that order block, it will typically look like something like this. That's how it normally goes. Once the orders are cleared, the price will move effortlessly, and it will move through like butter, like this. It'll run through, break, hold, close with some size and volume. Cool. They've cleared the supply. I can probably target the high of that, or the zone, the prior monthly zone. I can probably target that. I mean, it not only did it run, I mean, that was during earnings, so it really ran. It ran all the way back to that prior zone. And look, when it got there, when it hit that prior zone on the monthly, the same level here, despite the earnings, it's still sold off because there's still supply orders sitting there. They're still sitting there. So on Micron now, for me, like how I'm looking at this as a play, obviously I have the zone here. Like this, we could highlight in green literally right now as a play for us, okay? We can highlight this zone as an entry range for us, right? Ideally, deep half of zone will be the highest probability, right? We can set that up literally right now, okay? Make this like that. But we also have this BFI origin. So when price comes back to this BFI origin, what do you think is going to happen? What's the what do you think is probably going to happen? Like, look at what's happening here. What do you think is going to happen if that price does come back to this origin? What's the likelihood, or what's most likely going to occur? Yeah, more uppies. Yeah. And you know what? It's probably going to move relatively quickly. Yes, exactly. Spend very little time there and continue higher into the above zones. So, it's likely that if we take an entry at 95 in that range where that origin occurred, it's probably going to pivot and turn upside. And we could probably set a target to exit like this. And then I'll just go to my 4 hour, right? Just like this. Go to my 4 hour. And I'll say, oh, okay, where's my zone at? All right, there's my zone. Just like that. I'll take that supply side zone right there as a target. And then I'll have another target sitting right above it. If it clears that high like that, for the what? What's here? What's in this range here? I'm tying in the whole video together. What's sitting up here? Yeah, exactly. there's buy side liquidity sitting up there. So when this price goes above that high, right? When it goes above, it's probably going to retrace one more time. Most likely. So you could sell your swing in that range. You would enter either here on signal, or here on signal. Buy a monthly contract, buy a 1 month swing, let it play out, let it play out, target, sell most of your positioning here, and leave your runners to see if it's going to shove. If it shoves, cash your runners out and wait and see what happens. That is the BFI method in a nutshell. That's the setup. That's the swing method. That's how you do the thing. Now, do you have the patience to wait for that to happen, though? To wait for those retests. That's the hard part. But if you have enough tickers, in my opinion, if you have enough tickers like we do, there's a reason I have this like basket of like, 25, 30 tickers. Because yeah, maybe this one's not in a zone, maybe this one's not in a zone, but maybe this one is, or maybe this one is, or maybe that one is. Like one of them is probably going to be getting close. So, and you can work with it when it gets there. Yeah, I know it has alerts. I keep telling you guys to set them up. That way you're not surprised when the price gets there. You're not like, oh man, like, I gotta set my order up. I gotta, you know what I mean? You set it up ahead of time so that alert pings you, and it's like, oh hey, it's getting close to that time to do the thing. Yeah, Trading View is excellent. I love it when I hear an alert go off. I mean, I teach on Thinkorswim. You don't have to use it. It's just, I just recommend it. Okay. Some of the other guys have done I think everyone in here is on Thinkorswim now, but all right, that was a good run through. Do you guys have any other questions on that topic? I feel like that covered a lot of. Thanks, man. Yeah, that's why I was waiting to answer his question, because I was like, this is gonna be a long-winded question, and I wanted to kind of answer the other ones first. I knew that it was going to take a little while. And like I said, I'll upload this to YouTube so you can review it, and I'll put it in the education section tonight. Oh yeah. Yeah. So like if this price came back here and signaled at the 95 or 96 level, I would just take the 96 strike 2 weeks out. Because this is a weekly play, so I'll give it a weekly time frame to work. Now, if it came back into the monthly down here, I would take like an 86, just depending on where the signal's set up. Be like an 86 or 87 or 88, something like that, or even 90. Just depends where the signal would print. Right at the money, and I'd do it a month out because it'd be a monthly play. Okay. Ultimately, I don't like to go more than like max like two strikes tops. Max. 2 strikes out. I prefer just staying right at the money. Because especially when you're using more size, it's harder to stomach. It's harder to stomach the move against you if it's wrong. Or not even if it's wrong, if it's early. Yeah, you just now noticing the 30-point gap up? You're late, bro. Why are you trading CL? We already went over this. Oh, CL. What? Oh, okay. All right, fair. All right, you get a pass. I was like, dude, we just went over this twice. I'm like, we agreed on this last week twice, and you're doing it again? I'm gonna bonk you on the head. We discussed the 5K challenge rules earlier, Corey. I'm gonna post them in the chat. Yeah. This whole session that I just recorded basically this is like a walkthrough and the same kind of rules that we're going to be applying to this this challenge. Everybody's typing at once. Yeah, if there's no more questions, so at the money is really about the right setup. It is because when you're using size, which I'm sure that you will in the future because you have it to do so, when you're using size and you pile it in, if you're trading at the money and it moves against you, it doesn't just kill the pilot. That's the big key here. It doesn't kill it, because like if you go like let's just say like on this trade, let's just say we were trading Micron, right? You're trading Micron and you take an 88 strike at 88 and it moves to 86. It's nothing. Maybe, on a monthly contract that might be like 10%, But if you're at 88 and you take 100 strike contract, even on a monthly, that might draw you down like 35%. Like, that's just how it is, because it's so far out of the money. What is the risk of in the money versus out of the money? Yeah, you lose a little bit of the gains, but you protect your downside. That's the basic thing. But here's the thing. The at the money strike, a lot of times it works out better because let's say you're on a monthly contract, right? And it moves slowly, like it doesn't race up, but it moves slowly. The theta doesn't kick your ass. Yeah, exactly. Yeah, as long like once it's in the money and it's still running, you're safe, you know. You're not at major risk for like major loss, if you will. Here you go. Great example. You already did one. The Exxon trade we did, the contract went in the money, but it was moving very slowly. So, but if we had gotten like let's say we were on the same Exxon trade, and I put us on like a 118 strike, for example, we would have got our ass kicked. We would have got hammered because it was moving so slowly, and it was still out of the money. But because we chose the at the money, the 121 was like one strike away. It went in the money, and it was, you know, it wasn't a major win, it wasn't a major loss. It was not basically a nothing burger for us. So because it didn't go anywhere, it stayed mostly flat. So that's the biggest key here. You're protecting your downside. Yeah, you lose a little bit of the upside, but it's okay. Me personally, I'd rather lose a little bit of upside and be right than put big risk on and expose myself to a big loss because of Greeks. I don't like that. In fact, I hate that. Like if I'm right directionally, I want to be right and I want it to reflect in my P&L. But if I'm right directionally, but I'm getting screwed on the Greeks because I chose a strike that's out of the money, now I'm angry. That's what you don't want. That's that thing I don't like. So been there, done that many times. 10 out of 10, wouldn't recommend. We'll see how it opens up. Guys, do you have any more questions for me on the topic? I don't want to make the video longer than it has to be. It's already an hour and 45 minutes. So, okay, cool. Do you guys, anyone else? Great session. Okay, cool. Great. Fantastic. Okay, I'll cut the video here then. And I'll upload it to YouTube.